What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide a technical analysis on Sundays for your entries and exits and stocks that I am looking at during the week. You can also check me out at Hemi137 on X, as I do provide a daily pulse on the market to get you in tune with the current market sentiment. Now, before we get started, go ahead and remember to drop a like and let's dive right into it as we have a lot to discuss. A lot of it's going to be impactful, especially this week. There is a lot of information that is essentially being thrown out there. So, to capture everything can be a bit rough. I didn't want to essentially lay everything out because we had essentially the biggest earnings week over the past week. And the reason why I call it the Super Bowl week is or why people call it the Super Bowl week, is because of the fact that you have a lot of companies that are reporting that hold a lot of weight on the index. And if a bunch of them essentially start doing poorly, you can cause the market to gap down, which is something we saw over the past week. But despite that, they still all did very well. So why is the market gapping down? This is something I've always talked about, is you need to be paying attention to not only the expectation but forward guidance, as that can really dictate the price action of the market, considering we're coming into a back half of the year that's going to be extremely important how next year is going to play out. It is quite critical that again, the price action is what you want to be paying attention to. So with that being said, let's look at this past week. We had Amazon, Apple, Meta, Google, Microsoft all reporting. We had a lot of other phenomenal, just great insight companies reporting as well. And what I've noticed is that, yes, all these companies pretty much beat on all expectations. Amazon blew it out of the water. Meta still did extremely well. Google blew it out of the water. And then Microsoft and Apple. Again, you have to see that there is a massive decline, even despite being a single percentage over year. This is where Apple, it's, even though it did well, it beat all expectations. Year over year, it's just up single digits. That's not really what you want to see in a growth company. And when your company starts losing and start dropping at a double digit growth year over year, that's a problem. And we've talked about Apple multiple times, and we're seeing essentially the decline of that. Now, Amazon and Google and Microsoft have done very well because they're in the cloud space and what is essentially supporting AI and AI infrastructure, because you can provide a cloud model to allow companies to leverage AI, so they don't have to host that infrastructure, because that infrastructure is very important. Also, why they're investing heavily in nuclear facilities, because they need to power these AI infrastructure and understand the amount of hardware that is needed for that. So, being said, there are some additional earnings that did occur. You had Starbucks, which is getting absolutely just wrecked. Even though I do believe this new CEO that came over from Chipotle can really help them, it's still going to take time. Again, in this current economy, people don't have excess cash, and you're seeing that with where a lot of companies are seeing dramatic growth, and a lot of companies just are not. And one thing we have noticed is, as Uber didn't do as well either this week. And another thing is Caterpillar. Caterpillar was another big earnings week that we saw, and the growth is just getting absolutely obliterated, because something we've talked about, or had talked about on my daily pulse of the market, was uh, Bank of America had come out and essentially said that they are kind of capping any kind of construction loans to about 500 million, excuse me. And so again, these are the things that are really going to be growth into your economy, is these hardworking, labor intensive jobs. This is why our infrastructure is falling apart, because we're heavily relying on more technology as opposed to the infrastructure jobs, which we're seeing a lot of people bleed out. And what we point to all the time is any kind of like freight liners and stuff like that as well. UPS, FedEx, all these companies are kind of showing you that there's not a lot of production occurring and not a lot of selling occurring. And so that will have an impact. Yes, it's kind of lagging when you start to see it in some of these other companies, because some of these other companies are getting ad revenue or they're selling technology, which is great and fine and dandy. But again, you need basic infrastructure to support what's currently going on. And we're not seeing that growth. And even despite these massive growth numbers that you're seeing in the government, or essentially, let's create more regulators to create more regulations. You can't essentially have a booming economy because you have so many regulations. And a good example of that is Elon Musk has come out and talked about this, about, just trying to fly SpaceX, and the massive amount of regulation around it is absolutely absurd. That the water that they were using while putting out flames, it's absurd the amount of fines you get for like silly regulations that just should not exist. Like, you're restricting and taking away money that could allow us to advance the technology for something silly. Like, we don't need extra regulators when we need more producers and plumbers and construction workers and people like that. But ultimately, understand again, this is the current environment we're in, and this is why I always emphasize humanoids, and they can bring a huge boost to that industry. But again, it's going to be at least a couple more years before that's actually plausible. And so right now, what you're doing is you're leveraging the average everyday worker with AI, with a Copilot or a Chat GPT, to try to help them kind of help with that gap. And it can help to an extent. But again, you're working with a lot of skeleton crews, and you're seeing these massive layoffs, despite what is being said that you're living in a golden economy, that all these jobs and is just thriving. And if that was the case, is the Fed cutting by 50 points and looking at another cut this coming up week? So, being said, let's dive right into Intel laying off another 16,000 employees after just laying off 19,000. Now, earlier this week, they also reported that they're also cutting out a lot of employee benefits, including essentially the coffee in the office they're getting rid of. This is what is telling you how bad it's getting. You're getting into depression type data and numbers here that you haven't seen in decades, because again, the average wages can't cover the cost on your everyday food items, your insurance that you need for your car, for your home, if you own, or even if you're renting, you still have to have some sort of insurance. And they are completely price gouging to the essentially to the point to where you have to pay just straight cash for stuff, because to try to afford insurance, which having a car is required. And if you don't put a lot of money down on a home loan as well, it's also a requirement on your home that you have to have insurance as well. So, but again, insurance is skyrocketing, so people are essentially paying for just food and insurance at this point, and then hopefully you can still provide a roof over your head at that point. So things are not in good shape at all. So with that being said, JP Morgan to pay $100 million plus 10 million in civil penalties. JP Morgan, the biggest bank in the United States, essentially is continuing. They do all these. It's really hard to describe this, but they do all these very sus actions, and they get a slap on the wrist. They were just caught essentially, what was it, a couple of years ago, that they were essentially moving drugs in one of their shipping freights, and they got just a couple $1 million smack on the wrist, which is nothing to them, because they're making so much revenue off of people's accounts, where essentially that you only get 0.001% of a savings account, and they essentially put all risk onto you just to hold your money, and then they take all the profits. And so this is the problem with the banking system, and we talk about all the time. It's very corrupt and very greedy to do these things, and then take your money and leverage it 10x and make millions and billions of dollars, and give you pennies on the dollar for what you're holding in the account. So, and then another big event, this has kind of been going on for a while, but universities have been selling valuable paintings is a common theme we're seeing around universities to cover costs. So they're selling these expensive multi-million-dollar paintings to essentially pay for additional costs, because a lot of people over the past probably say about 5 years, essentially the pandemic, what's been going on is people just aren't going to college anymore. It's too expensive. You start out with a massive amount of debt, and then on the same token, if you better hope you have a good degree to at least compensate for some of that debt, or you'll remain in debt for a very long time. This is something we haven't talked about in a while, but I had talked about a couple months ago with student loan forgiveness. That has also been delayed another 6 months. So this was supposed to hit us around this time last year, and because of the pandemic, they stopped allowing students to pay. And during that time, they've essentially delayed it for another 6 months till after the election. So again, we've talked about people can't even pay $1,000, and then now you have student loans that are going to put people in a very bad spot, that people have to pay them. And even though I still believe the interest is gathering on these student loans. So if you haven't been paying your student loans and just thinking it's going to go away, that's not going to be the case, right? Like, you were promised that these student loans are going to be paid off, and it's not plausible. If you go into that loan, you are required to pay that money back. And this is why people are finding, or the younger generations are finding, that it's not even worth going to college to get massively in debt when you can become a plumber and make tons of money as of right now, right? So with that being said, there's, like I've said, there's so much stuff going on behind closed doors. And then we had on Friday non-farm payroll come out, and we've only added 12,000 jobs at an estimated 106. So it has dramatically dropped. And this was quite shocking to me, because I was expecting them to try to sugarcoat this the best they could, because it was the last one before going to elections. They didn't put any sugar on this, and it came out nasty. And then only to see that the last two job reports were lowered by 112 jobs. So all these layoffs are occurring, and not only are all these layoffs occurring, but there's no new job openings. And so healthcare and government jobs are pretty much the only jobs that have really been around. Everything else is depleting, and you're seeing even technical jobs, massive people are getting laid off left and right on a lot of these different jobs. Again, even you look at Amazon trying to 75% of their workforce is essentially trying to strike against Amazon, because they're forcing them to come in the office 5 days a week, because they don't want to pay severance packages. So that if they mandate that you have to come into the office and you don't want to show up, well, then that's on you. You can quit. And so this is how they're trying to get rid of additional people. And we've also seen that essentially happen with, I believe it's Starbucks said that this week as well, that all their corporate employees, if you are not coming into the office at least 3 days a week, you can pretty much just quit. And then that way they get out of having to pay severance packages. And so, in Meta is another one where you have these engineers that are getting paid $400,000+ a year. And because they spent their meal card, their $25 meal card on detergents and uh, other small things that they need for the house, everyday items, they are being let go. And so this is the nitpickiness that is happening when you are trying to cut. You don't really want to cut because people are good workers. You try to have some other excuse to continue to cut, and it's becoming a huge problem. So again, despite these talking heads, you also had Yellen come out this week as well. That was something, and she said that there's a lot of fraud in the system. Imagine that. So again, you may be a conspiracy theorist until it actually comes to the forefront and these talking heads actually admit to some of these things, or it's not heavily covered that they admit to some of these things that are actually occurring, and then they say it's not real, it's misinformation, when you've told us this straight. Like, there's actual video of you saying these things, and there's documentation about you saying these things, and then them trying to alter it and cover it up to pretend like it doesn't exist. And so again, you are headed into a new year where things are going to get a lot worse. We are taking the steps to get better by starting to cut, but it's not going to be fast enough. And this is why it looks like we could be heading into our 2008 next year. If we start to see rapid rate cuts in January, that could be highly concerning. That will lead us straight back into 2008. You understand a lot of loans are maturing next year, that if we cannot lower rates quickly enough, again, you have to understand people are coming from almost a 0% interest rate to now a 4.75, and they just can't afford that. And so what's going to happen is they can't afford to employ their employees, so they gotta have to continue to lay off or shut down and close down. Applebee's, again, you have a lot of restaurants that are suffering through this. They're getting absolutely obliterated, having to close more stores. Banks, Bank of America has closed, I think, the most branches out of all the banks. Again, everybody is trying to reduce risk, reduce cost, because not only do you have employees striking to get higher wages when your margins are already small and you can't afford that, you're also dealing with inflation for companies. And so, again, they can't deal with both wage fights and inflation at the same time and remain profitable. So that the only people that really affects is the average everyday Joe that's out there trying to just get a job and provide for himself or his family or whatever the case is. And so, again, not what is completely two different things. What the essentially the utopic view that it's getting shoved down your throat, and then also the reality of the situation that it is not a pretty sight, that you are in a depression at this point, not only just in the domestically, but it is a global depression at that. So this week is a very, very big week. You have election day on Tuesday, which again is not going to have a huge impact directly on the market. From what we're hearing, it could be we're not going to get results apparently on Tuesday night. Apparently this may be delayed to 2 weeks, which is absurd and should not be happening, but it is. And with that being said, that can, whatever comes from that can have a fallout. So the next couple of weeks are going to be extremely, extremely important. We've been waiting for this. Everybody's ready for the ads to be done and all the essentially the bureaucracy that's going on and everything else. But it is Tuesday, so that will be glad that it'll be over. But again, we probably won't know for quite a few days until what actually happens. But that is Tuesday. And then Thursday, we have the FOMC interest rate decision. Right now, it's heavily weighted that we're going to get another 25-point basis move, again, directly reflecting 2007, late half of 2007 going into 2008. And then we've got Fed Chair Powell speaking at 2:30 Eastern Standard Time. So, and this is on a Thursday, if you take that into account. So, Thursday, you have Fed Chair Powell talking directly after that. So you're more than likely get a 25-point basis move, and then Powell will come out and say, which, because it is November and you're only going to see him one more time before the end of the year, I wouldn't be surprised if he starts to say things are strong and resilient and things are way better than they actually are. But now you have to understand, after the election, once your vote is cast, there is no need to provide any sugarcoating. And so over the next couple of weeks, especially next year, once whoever takes the office next year, then there is no point sugarcoating. Your vote has been cast. They can correct stuff like they're going to correct stuff. And we're seeing with the job reports, which again was kind of surprising this past Friday, but things will get a lot worse. We don't even have official numbers. And it's going to show that you've been in a depression, which is essentially a recession that is extended past 6 months. That's the definition of it. And things will get a lot worse again until you start dramatically cutting. So expecting, since we started cutting now, I'm expecting the market to kind of do price in a recession between now and the summertime, and then actually start to recover. It's not going to be a fast recovery. You have to look at China. Again, China's been dealing, although China's been on lockdown an extra year than we were, but you have to see what's going on. They've done massive stimulus. They've done massive rate cuts, and their markets are still falling. Expect some sort of phase of that happening to us, and then realize that we will try to rebound at some point next year. I think we will bottom next year at some point, and then at that point we will start making a recovery, and it'll be a slow recovery in the economy in general. A lot of companies will start profiting a lot faster, a lot quicker, But again, ultimately, the economy in general, I think automobiles, houses, and those kinds of things will start bottoming out, are really selling heavy during this next year. And then obviously houses will take a couple years, but we'll start recovering. We just start to see more and more decline over this next 6 months, where I think you'll really see a sharp decline on all assets. And then from that point, I think you'll start turning around. The recovery stage on that will take a lot longer for some assets than others. But that is my prediction over the next 6 months. Again, I don't like to project too far ahead, but I do believe we'll have a major correction within the next 6 months or so. Then upcoming event pivots, monetary policy obviously is on the 7th. Core is on the 13th. I think I had this marked at a different date, so I had to fix that. But it is on the 13th. So next week we will see core. And then we're going to review the weekly review for the earnings. We got a lot of the next 2 weeks. We really have a lot of good earnings still. So still do really want to report on that. And then we'll go from there. And then expected moves. This is crazy. 151 points on SPX. Now, if you follow me at all, on average, SPX has been around floats around 60 on average. Typically, if it's below 60, it's really low. They're really not expecting a lot. And we've really only seen over the past year, I think maybe 120 at most on some really big events. But I haven't seen 150, 160 since the pandemic. So again, they are expecting a big move on the index because, again, there could be a fallout domestically with what happens with the election. And during that time, that's why they're pricing in that's essentially the end of the world. 150 points. That's just they have an overall week. So you have to get a 150-point move to make any kind of money out of essentially SPX options this week. So that's something you need to keep in mind. Tesla is still very high because it's been a little bit more mobile this week. Again, you're seeing a lot of these really high. Boeing is a little bit higher than normal, but they've gotten so much bad news. JP Morgan is at 9. On average, this is about 4. So it's more than double. Again, this is what I'm talking about. And something you've been forewarned is the Fed has been telling you. A lot of these people try to mask what's going on, but they've been telling you that there is going to be bank runs. There's going to be bank failures. There's going to be a lot of fraud. A lot of things are pointing to the fact that, I'm not trying to be political here, that it may be Trump that wins, and they may be trying to grease the skids and trying to clean out some of their closets before Trump may come into office. Again, if he comes in and does what he says he's going to do and start cleaning house, that could be a big problem. And so who knows what can happen from that, or the fallout from that. But I expect essentially a lot of volatility in markets if he does come into market. I expect the same thing even with Harris as well. Maybe not as dramatic, but I expect some big move as well. Again, this is why it's said either candidate may not be likable. The lesser of two evils is what a lot of people like to say. But I think there's a reason why they aren't prime candidates, because of the fact that what is about ready to come in January is going to be a rough time, and the next year is going to be really rough, and then the 3 years following that will have to be some sort of recovery in hopes for another new election coming up. So these are what you need to be paying attention to here. So again, a lot of stuff being priced in, so we'll see how that goes. Now, we have a lot of big earnings. A lot of these, particularly this week, are ones I've been talking about on my channel for a while. There's going to be some earnings, so expecting to be watching these very closely. And next week, there's also some really great earnings. And then I think the following week after that, we have NVIDIA earnings, which NVIDIA has surpassed Apple to become the #1 company. They've actually knocked out Intel from the NASDAQ, which NASDAQ's been holding, I think, for 25 years or something. So again, some big changes are occurring, and this is about the time to do it. This is why AI is so important. This is why humanoids is so important. Cybersecurity, all these things are really important during this time, because that's where we are shifting. It's our industrial revolution currently going on. And so with that being said, let's start looking at this week. Monday's going to start out with a bang. Monday at close, Palantir is a big company. I said it's probably got the best use case for AI, and probably by far at that. But again, they are reporting on the past week. I've talked about this when this stock was like a $750 stock. You can go back to my videos and it's there. But I've been talking about this company for a long time. Hers. This would be a good. Or Hims and Hers. This would be a really good company to potentially, if we do start selling off, I have this on the map to potentially pick some of this up, especially with it's a lot of online pharmaceuticals. I don't believe they actually have any physical locations. But with that being said, I think this could be very popular, especially with a large workforce that is getting set to retire. So I think there could be some potentially big profits in this one. A win is one I'm really looking at, potentially also getting in. So that one would be good. Looking forward. Tuesday morning, not really watching any of those. Tuesday after close, Super Micro. This company here again. They're I guess head auditor quit because there's some real shady stuff going on, and they actually just partnered with Nvidia, which is concerning for Nvidia. But we've talked about this that there's probably going to be some major problems because again, you're trying to show face towards China and Russia that you are leading in the AI space, and so I think there was some pencil whipping going on there. Sadly, this Super Micro is being smashed because of it, but again, they had a partnership, so that one will be interesting to watch and see what comes with the fallout of that moving forward. And then on Wednesday morning, Celsius is a big one I've been talking about. I think should be really important. Car sales will be important to be watching as well. And then Wednesday after close, ARM is a chip company, like a mobile chip company that was almost bought out by NVIDIA, but it was stopped because they think NVIDIA would kind of corner the whole chip market if they would have been able to buy ARMS. So that's how important ARMS is. AMC, obviously, just because of the hype there. Qualcomm would be important for chips. ELF is another one I've been talking about for quite a bit. Again, their growth has been extremely good. It's been at like 70 for a while, and then the last earnings, it's been selling off because the last earnings they were only getting like 30 some percent, which is absolutely absurd when you're talking about Apple only has about 6% growth. You have ELF that it's still sitting at like 38% growth. So one I've been talking about for a while. I really like ELF in the next coming, especially if we start talking about turning the money printers back on and the economy start actually boosting and recovering. ELF is going to be really, really good. Palantir is going to be really good. Hims is going to be really good. Wind will probably be really good as well. So a lot of the ones I talk about, Celsius will be really good when on this recovery. So these are the kinds of things I'm watching for. Thursday, Datadog will be interesting to watch. It should do well. And then Thursday close, DraftKings. Again, any kind of gambling will pretty much do well. When gambling starts suffering, that means people absolutely have no money. When people have very little money, they gamble what little they do have. Trading Desk has also been rapidly growing as well. That'd be one you need to be paying attention to. Affirm is one you're going to have to watch. Buy now, pay later. When Affirm starts really hitting bad, again, they are not reporting a lot either, which is highly concerning. But as far as that report goes, as far as impact to a person's credit score, but their numbers would be interesting to watch to see, because if they do very well, that means a lot of people are heavily relying on buy now, pay later, because this is integrated into a lot of things. It's integrated into Amazon and many other things, and people can essentially, take payments on their food, which is crazy to think, but it's something that people are actually doing. And so those are the ones I'm really watching. Again, some really, really great earnings, some really, really great up and coming companies that are out this week. Next week will be a lot the same. So just keep that in mind. And then once next week reports and it's kind of just slowly rolling out, there'll be some good ones here and there. But ultimately, again, you want to kind of stay with some Potentially, this is probably the only level. You don't want to go much lower than this level as far as like potentially doing investments. Again, that's just my opinion, because of what could potentially have the fallout from that. But again, we'll see. At this point, it's quite astonishing that things are being reported, and and a lot of it's not true, and things are looking really bad. And the companies that are doing still very well right now, like Elf, still having a 30% year over year growth in this current environment is amazing, right? Celsius is another one that just still has amazing growth, but because it didn't have the amazing growth numbers that it did a couple months ago when things were running out, now people don't have any money, but it still has amazing growth. So once the bull market comes back, these are going to absolutely crush it. These are the times you buy for companies like this that actually are doing very well. Palantir, again, it's been on a quite of a tear lately, but if it does pull back, if we do have a major correction, Palantir will be one to heavily load as well. So those are things just to keep in mind. So, but with all that being said, if you made it this far, go ahead and drop a like. And until next time, I'll see you guys later.